morning, everyone. I know that this has been my favorite event that I've been to in a really long time. So happy that you are all here as well. I think this is a really high quality crowd. And I think on stage today, we have the Queen of Wyoming, Caitlin Long, who is here with Custodia today, and Nathan McCauley, who is the CEO and co-founder, I believe, of Anchorage. So I'm really excited to have you both here. I'm Kristen Smith. I am the CEO of the Blockchain Association. We do a lot of public policy work. I would think in kind of a normal world, the world of sort of banking would not interact with policy. They should be separate. But I think there are a tremendous amount of both political and policy issues that have affected the world that you all operate in today. So, but maybe just to kind of level set before we get into some of these issues, maybe we can start with you, Caitlin, and then go to you, Nathan. Can you talk a little bit about your respective charters and some of the key features? Because I think they're very different. They've come in different ways, but I think unique in that they're kind of the few that are really sort of kind of crypto native as well. So why don't you start, Caitlin?
Yes, thank you. And thanks, everybody. Welcome to my home state. The Special Purpose Depository Institution Charter is what Custodia has. There are 4 chartered institutions here, chartered by the state of Wyoming. At a high level, the U.S. has what's called a dual banking system. Historically, it was always just the states that chartered banks. And then during the Civil War, the OCC was created to charter banks federally. And there are, fast forwarding, there are 3 basic types of regulatory licenses. One is a money transmitter license, another is a trust company, and another is a bank. And that's kind of the pyramid. The money transmitters are allowed to move money, but not much else. Trust companies can act as trustees, but cannot take U.S. dollar deposits. And depository institutions, the banks at the top of that pyramid, are the only ones that can take U.S. dollar deposits and are eligible to bank at the Federal Reserve and get access to the U.S. dollar payment system, which is operated by the Fed.
Nathan?
Sure. So Caitlin summarized the dual banking system very well. We'd like to say that our charter, which is a national charter issued by the OCC, is directly from that lineage that Abraham Lincoln established the national banking system through the OCC, and we are the first and as of now only federally chartered digital asset bank. We hold crypto for institutional investors. Our raison d'etre is to allow our clients to satisfy SEC regulations and due diligence requirements that is needed for them to run their businesses, whether they are sovereign wealth funds, large venture capital funds, private equity firms. Anybody who's looking to take significant and large positions in digital assets commonly needs to satisfy the custody rule from the SEC. And so our federal charter allows us to satisfy that for them. In addition to being a federally chartered bank, we run a lot of other businesses that are there for our clients, whether it's a trading capability that they like to have access to, settlement facilitation that they like to have access to, staking, governance, really trying to provide the full suite of services for institutional investors wanting to participate in the digital asset ecosystem.
Caitlin, why don't we go to you? The topic, which we'll stray a little bit from as we move on today, is banking crypto inside the digital asset industry's fight for equal access. And I think that has meant it's manifested in many different forms. Sometimes it's as simple as a crypto company having access to a bank account. Other times it's been access to sort of crypto depository institutions getting access to the system. But can you talk a little bit about Chokepoint 2.0? I think it was interesting when all of that happened 18 months ago. We had this whole debate, like, do we say that? Do we not say that? But I think we had presidential candidate Trump talked about it, so it's in the clear now. We can say it. So is it real? What's happening, and what have you been experiencing?
Well, it's definitely real. And in fact, actually, it shouldn't have even been a debate whether we were going to talk about it, because the Fed announced its regulatory priorities. Every quarter, they put out a list of the regulatory priorities, and they divide the banking world between community regional, and large banking organizations, small, medium, large. And they announced a couple of years ago that community and regional banks were that a supervisory priority was fintech and bank as a service. They were going to be cracking down on all the fintech and bank as a service relationships. Okay, so what that means is if you're a startup in this space, your bank is very likely a target. And unless you're dealing with a large banking organization, because we know that the Fed has a preference for the very large banks, doesn't really want a lot of small banks to exist. And in fact, actually, that's been a trend in my career. When I first started doing bank M&A on Wall Street in the 90s, there were 40,000 banks, and now there are 10,000, including credit unions. So it's been a huge consolidation wave, and that's continuing. But long story short, the large banking organizations aren't facing that. Okay, so the problem that our industry faces with getting banking access with the large organizations is that they only want to bank the very, very largest companies. And so there isn't anybody who's able to get durable banking access if they're not the very largest players in the space. And the impact of that is a lot of startups are really struggling. And in fact, actually, former Commissioner Faulkner of Wyoming is sitting in the front row here. The state of Wyoming was trying to solve that very problem by creating this new special purpose bank charter for the digital asset industry. It was in 2017 and 2018, we had a number of startups come to the state and testify that the biggest issue that they faced was they couldn't get durable US dollar banking services. And the state said, what can we do to help solve that? So it created the special purpose charter, spent 100 meetings with the Fed preparing for the charter. 4 of us got chartered. Everything was moving swimmingly. And then all of a sudden it stopped. It was after Biden was elected, there was a group of anti-crypto people at the Fed who were on the ascendance in the spring of 2021, and they rug pulled unexpectedly right after FTX, coming from a directive from the Board of Governors under Elizabeth Warren's thumb.
Yes, well, as we've seen, I think there's been a huge tension between some of the regulators and other policymakers. But I do think there have been some positive developments over the past year, at least. One of those being the ETF approvals finally being approved. Of course, this was a result of a legal challenge as well, where the SEC was determined to be arbitrary and capricious and by a district court, and they had to, or a circuit court, excuse me, and they had to go and change that. But I think that's had a really positive impact on the industry overall, and then with the Ethereum ETFs following in July. But Nathan, can you talk a little bit about what the impact the ETFs have had in the crypto banking world and potentially some of the opportunities there?
Yeah, I think the crypto ETFs were, so far we've got Bitcoin and Ethereum out as publicly available ETFs. Really kind of a watershed moment for the industry in that these approvals came through in a way, like you mentioned, that was, had to do with our separation of powers, really. The lawsuits that were filed by industry participants kind of forced the hand of the SEC, and now the products are out. And as is no surprise to anyone in the industry, they had incredible amount of pent-up demand. I think some people have said that the Bitcoin ETFs, the ETH ETFs, actually created the demand. My point of view is that the demand was always there. There were a huge number of institutional investors who wanted a product to be available within something like the ETF wrapper, easier to understand settlement, easier to understand how to pay for it and get into that position. And that was just going to be the right mechanism for a whole class of investors to be able to participate. And so now with that seal broken, we can chart the path forward where you start to say, okay, are we going to continue to have a series of single asset ETFs? Is every token going to get an ETF? Or over time, are we going to start to see diversification strategies? I mean, in large part, the point of the ETF vehicle is to combine a set of investment strategies and make that available. And so I'm really excited for what the future holds around starting to see income generating ETFs, like that might be able to come from the staking assets being allowed to stake within those products. And then moving forward, capturing more and more of the opportunity that's available within digital assets. The set of things that investors do within our platform, because they have direct access to assets, is an incredible diversity of things that they want to be able to do. And I'm imagining that over time, many of those activities that are already happening within the institutional space will get captured with an ETF wrapper and be available more broadly within the investing ecosystem.
Somewhat related to that, I'd love to ask both of you about SAB 121. So for those of you who don't know, the Staff Accounting Bulletin 121 was really an advisory document that the SEC issued, I guess 2 years ago now, that basically said that if a bank is going to hold crypto assets, that it needs to be on listed as a liability on the balance sheet. So this is obviously very different than if I were to, put a piece of jewelry or some sort of valuable item into the bank's care as a custodian. And I think we had maybe kind of a rare victory in that we actually got Congress in a very surprising bipartisan fashion to agree that this was a draconian policy, because I do think we have all of these ETF products. I think it's better for to have a competitive industry where you have multiple organizations that are able to safeguard these. But Caitlin, would love to kind of hear your thoughts on SAB 121 and what impact that's had. Obviously, there was an issue with the veto, but would love to kind of get your thoughts on how that played out and if that's had any impact on Custodia.
Well, it was a rare point of agreement between the banking lobbyists and the crypto industries associations, because everyone except for the Warrenites agreed that it was draconian, and that's where you really actually saw for the first time the moderate Democrats get together with the Republicans and try to get this overturned. And to your point, it was overturned, and then Biden vetoed it. I'm a little surprised that he did, given how much the banking industry was pushing for this. But what it was really designed to do was to make it uneconomic for the banks to get into the crypto custody business. So it was very much part of the all of government coordinated approach to try to kill this industry in the United States. And it didn't affect Anchorage. It didn't affect us because we're not SEC filers. Our call reports are public, and you can see we're not applying SAB 121. Created all kinds of problems for the auditing firms because they had certain firms that had to apply it and others who don't. And if any of you come from the auditing business, you know that the auditing firms do pay at their national office level attention to consistency. And the SEC just arbitrarily created this accounting rule that's not U.S. GAAP and applied it just to a subset of companies, and it happened to be all the large banks and all the publicly traded banks. So long story short, I think it's going to be overturned. The SEC, the irony is that right after the vote occurred, not to overturn the veto, there was a leak to Bloomberg, and it was a senior official at the SEC, of course, saying that they were granting special exceptions to certain large banks. And I did some digging and found out it's at least one large New York bank that the Fed also gave a special exception to. So we now have very large banks. It's one of two banks I could guess. Very large banks. It's either probably Goldman or Bank of New York, or maybe both. Bank of New York Mellon. They're coming for the custody business. So what's the impact of that? Banks provide better protection than trust companies and money transmitters in the event that they fail for the consumer. So the consumer is better off. The banks have special receivership regimes that favor the customer instead of, if you end up in federal bankruptcy court, the receiver's job is to pull assets into the estate. Whereas if a bank goes bankrupt or goes bust, bankrupt is not technically the right word because it can't. The bank goes into receivership, and the receiver, their job is to pay the customers back. Okay, so from a consumer protection perspective, you want all of these assets inside banks. You don't want them in trust companies or money transmitters, but the problem is that the federal banking regulators have been blocking crypto-native companies from becoming banks. Every one of us who's applied for FDIC insurance, every one of us who tried to buy a bank, every one of us got blocked by Washington, D.C. They don't want the consumers to be protected. Watch what they do, not what they say.
Nathan, what is Anchorage's position on SAB 121? Is this, I mean, in some ways, maybe if it were to be repealed, maybe that's bad for you because it brings in competition, or what is your thinking along those lines?
Yeah, on SAB 121, it ends up being pretty interesting. I think I want to start with maybe having a bit of a contrarian viewpoint and talk a little bit about where the SEC is right on SAB 121. And this is not popular among crypto circles, but I think the area where they're right about SAB 121 and its incredible amount of very deep, nerdy accounting. And so I'll try to keep this at a high level. But basically what they are saying fundamentally with SAB 121 is that holding digital assets is risky. It is a risky activity, and because of the bearer nature of the assets, you can lose all of them. If a custodian does a bad job, even just ignoring maliciousness that we've seen in the space, but if the custodian does a bad job, they can lose all of the assets, and there is no opportunity for recovery. There is no undo button on blockchains. And so what they're trying to convey with that is you need to have a good operational discipline. You need to have a good security posture. You need to get dozens of things right. And that opportunity to say, hey, you need to get dozens of things right is, in our view, best done by banking regulators overseeing all of those different areas that need to get right. Your operational processes, your accounting principles, your security practices, all of this stuff needs to get right. You need a full service audit and examination in order to do that. And that's what we have with the OCC. The OCC oversees that, oversees all of our processes, oversees that we have internal audit that's looking over our things, that we have a board that is overseeing our bank that provides credible challenge to everything that we're doing. And that's, in our view, the right way to solve that problem. And so while the SEC is right that it is important to get everything right, and tech companies, in many cases, are better positioned than the large banks to come into the space because they know how to build the technology, they know how to recruit and retain the engineers that can manage these processes. They can do things in a crypto native way and really understand things deeply. The idea that you would say, hey, you need to get these dozen things right in order to do this correctly, and then instead of passing a set of procedures that would make that process come together correctly, they take a very blunt instrument, which is accounting guidance, and say, okay, what we're going to do is we're going to take this fundamentally right view that we have that security is hard and enact it via accounting guidance. Is just a little bit of a misnomer, because it doesn't actually solve the problem. It doesn't lead to any fruitful conversation on here's the right way to do that, here's the wrong way to do that. And I think most importantly, the reason that I ultimately think SAB 121 doesn't hold the day is that it makes the SEC the overseer of the banks. The banks think of it as, the bank regulators think of it as their responsibility to oversee all the operations that happen inside of their institutions. This is why we have a dual banking system where we have federally overseen banks, state overseen banks, and the idea that the SEC would then exert its own opinion on the internal structure of how banks operate is, I think, ultimately going to be the axis on which SAB 121 and that mechanism falls.
Caitlin, we only have a few minutes left, and we would be remiss if we didn't discuss Custodia's ongoing litigation. There have been a lot of developments over the summer. Can you catch everyone up as to where that litigation is at with the Federal Reserve?
Yes, we're the tip of the spear. This is all a passion project for me. I'm making minimum wage, by the way, only because they're making me do this. I want to get this done for the industry. That is what the state wanted to do. It's a passion project for the state as well, trying to pry the door open. It started friendly. And again, it was because of this ascendant group of anti-crypto people within the Fed who got power that this whole thing went pear-shaped, so to speak. But we are operating. By the way, 2 of the 4 Wyoming Speedy Banks are operating, us and Kraken Bank. We are about to launch a 24/7, $365 US settlement platform for this industry, which is an acute need because so many of the banks have backed away or are under enforcement actions so can't expand that service for the industry. So come talk to us if you're interested in participating in that. And we are partnered with a large banking organization, which is helpful in that regard. Like I said, they're not under the gun like the smaller and regional banks are. But long story short, coming back to the lawsuit, the Fed will be filing its response next week, and then I think our response is due a few weeks later. And this decision will be coming down soon. It'll be interesting. A lot of people are watching it. But there are a lot of folks who want to sort of ride the coattails. It's going to be fascinating to see, A, what the court decides, and B, if it applies, the Fed will take the position that it's specific to Custodia. And so it's going to be interesting to see. They did that, by the way, with one of the Wyoming Speedies. Two of them, it's public information, withdrew their Fed master account applications. One was asked to spend money for a legal opinion that they were actually a bank. When the Fed had granted had granted 3 of the 4 of us our ABA routing numbers, which means by definition they recognized we were a bank. So they're going to be, I suspect that they're going to make it as narrow in its application as possible. But our mission is to provide the banking services, durable banking services, to this industry in a safe and sound manner, so that the bank runs that occurred at the banks that service the industry, that proved that the old fractional reserve system didn't work with the deposits that could literally disappear in the span of minutes from depositors in this space. That business model doesn't work. It's not sustainable. So here we are to try to solve that durable banking problem, and I'm convinced we will ultimately solve it, but it's going to take us a little bit more time.
Final quick question. Any thoughts, maybe starting with you, Nathan, on the impacts that the election might have on the issues we've spoken about today?
So I think that the SAB 121 repeal and its bipartisan support across Democrats and Republicans is something that the crypto industry must learn from. I don't consider the SAB 121 repeal, even though it got vetoed, I don't even consider the fact that it got through a win for crypto. It was a win for the traditional banks.
Yeah.
And we need to learn from the traditional banks. And what the traditional banks understand is that in order to get good policy for your industry, you must be bipartisan. You must understand that you must reach across the aisle. You must talk about how your solutions, the things that you're bringing to market, and the industry that you're building is fundamentally good for America. And I think that's the task ahead of us, is continuing to craft that narrative so that this industry that is going to be here with us for the next 100 years can persevere through Democrat administrations, through Republican administrations. And so that's what I think we need to really spend a lot of time to focus on.
Just real quickly, yeah, obviously 2 of the 3 candidates are pro-crypto. One of the most important things, yet there's been all this conversation about whether Gensler's going to be Treasury Secretary. That was the drama on Twitter yesterday. And multiple Democrats came forward to me and said, no, that's not going to happen. And I am trying to work with both sides here. But there's one takeaway, which is, and one of the Democrats publicly said it was a huge win that there wasn't an anti-crypto plank in the Democratic platform. And my response is, that's not enough, because the debankings will continue until morale improves. The debankings are going to exactly. The debankings are going to continue until the bank regulators no longer have it as a priority to crack down on fintech and bank as a service. That has to be overturned. So it's not enough just to have the anti-policy backed away from. You actually have to overturn the regulatory priority and get the bank regulators to back off. And that, until I see that happen, the debankings are going to continue.
Caitlin, Nathan, thank you very much. Really appreciate your time today.
Thank you.